Why every single-member LLC needs an operating agreement for liability protection. Starting a business is an exciting journey, and for many entrepreneurs, forming a single-member LLC (SMLLC) is the best way to structure their company. A limited liability company (LLC) provides legal protection, tax flexibility, and operational simplicity. However, one crucial document that many new business owners overlook is the operating agreement. Even if your state does not legally require one, having an operating agreement in place is essential for protecting your personal assets and reinforcing your business's legitimacy. In this article, we'll break down why an operating agreement is a must-have for single-member LLCs and how it helps safeguard your business and financial future. What is an operating agreement? An operating agreement is a legal document that outlines how an LLC is structured, managed, and operated. While multi-member LLCs typically use this agreement to define the roles and responsibilities of multiple owners, it serves an equally important purpose for single-member LLCs. For a single-member LLC, an operating agreement does the following. 1. Establishes the LLC as a separate legal entity, reinforcing liability protection. 2. Documents ownership, capital contributions, and financial management rules. 3. Provides a clear business structure for investors, banks, and legal authorities. 4. Helps avoid default state laws that might not align with the owner's preferences. How an operating agreement protects single-member LLC owners. One of the biggest advantages of forming an LLC is that it limits the owner's personal liability for business debts and lawsuits. However, without an operating agreement, this protection can be weakened. Here's why. 1. Reinforces limited liability protection. One of the primary reasons business owners form an LLC is to separate personal assets from business liabilities. However, if an LLC does not have an operating agreement, courts may disregard the LLC's limited liability protection in a lawsuit, holding the owner personally responsible for business debts. This is known as piercing the corporate veil, which happens when an LLC fails to maintain proper business formalities. An operating agreement proves that your LLC is a legitimate, separate entity, helping protect your personal assets from business-related lawsuits. 2. Establishes ownership and financial structure. Even though a single-member LLC has only one owner, it's still important to document ownership details and financial management practices. An operating agreement specifies 1. The owner's initial capital contributions to the business. 2. How additional contributions will be made if needed. 3. The process for taking distributions from business profits. Without an operating agreement, your LLC may be subject to default state laws that might not align with your business goals. 3. Helps with banking and financing. Many banks and financial institutions require an operating agreement before allowing an LLC to open a business bank account or obtain financing. Having one in place ensures smooth operations when it comes to 1. Opening a business checking or savings account. 2. Applying for business loans or lines of credit. 3. Establishing credibility with vendors and investors. 4. Demonstrates business legitimacy. An LLC without an operating agreement may be viewed as a sole proprietorship, especially by lenders, courts, or tax authorities. This means you could be personally liable for business debts, defeating the purpose of forming an LLC in the first place. An operating agreement reinforces that your business is a separate entity and is being operated professionally, further strengthening your liability protection. 5. Defines business continuity and succession planning. What happens if the LLC owner becomes incapacitated or passes away? Without a formal succession plan, the LLC may dissolve automatically. An operating agreement allows the owner to specify 1. Whether the LLC will continue operations or dissolve. 2. Who will inherit or take control of the business. 3. The process for transferring business assets. This ensures that family members, partners, or heirs can transition the business smoothly in case of an unexpected event. 6. Helps prevent IRS scrutiny and tax issues. The IRS automatically treats a single-member LLC as a disregarded entity, meaning the LLC's profits and losses pass through to the owner's personal tax return. However, having an operating agreement clearly outlining financial management can 1. Help avoid IRS reclassification of the business as a sole proprietorship. 2. Clarify tax elections if the LLC chooses to be taxed as an S corporation or C corporation. 3. Ensure proper record-keeping, reducing the risk of audits. Without an operating agreement, there may be ambiguity about how income, expenses, and tax obligations are handled, which can lead to unnecessary scrutiny from tax authorities. How to create an operating agreement for a single-member LLC. Now that you understand the importance of an operating agreement, here's what should be included. Key sections of an operating agreement. 1. LLC formation and business details. Official name, address, and registered agent information. 2. Ownership and management. Declares that the business is owned 100% by the member and whether it's member managed. 3. Financial structure. Details capital contributions, how profits and losses are distributed, and tax elections. 4. Business operations. Establishes how business decisions are made and how records are maintained. 5. Liability protection. Reinforces that the LLC is a separate legal entity from the owner. 6. Dissolution and succession planning. Outlines what happens if the business shuts down or ownership is transferred. How to get an operating agreement. 1. DIY approach. You can use a template and customize it for your business. 2. Hire an attorney. If you have complex business operations, a lawyer can draft a legally sound agreement. 3. Online legal services. Platforms like LegalZoom or Rocket Lawyer offer customizable agreements. Final thoughts. Protect your business from day one. Starting a single-member LLC is a smart move for new business owners, but forming the LLC alone is not enough to guarantee liability protection. A well-drafted operating agreement serves as your business's foundation, helping to reinforce limited liability protection, define ownership and financial management, ensure compliance with legal and tax regulations, build credibility with banks, lenders, and investors. If you're forming a single-member LLC, don't overlook this critical document. Taking the time to put an operating agreement in place now can save you from legal headaches and financial risks down the road. Are you currently setting up your LLC? If you need help drafting an operating agreement, consider using a customizable template or consulting a legal professional to tailor it to your business needs. Your future self will thank you for it. In the next article, we will delve into how to create an operating agreement. Stay tuned for more helpful small business tips and tricks to help you with getting your business set up for success.